How's it going, guys? My name is Sebastian. I'm an options trader. Let's take a look at how I made $840 in just 40 minutes in the stock market. Here we have a daily chart of XPEV. Who cares? I'm trying to look at the 1 minute. Let's look at my trade and how I got this. XPEV was making a good pre-market run. See this higher high, higher low. I could even put a trend line in this. Around right there. Was making this channel right here. This is exactly what I was looking at. Market opens. As we know today, S&P 500 was just dead, right? Trying to see the names that were holding up. Who was holding up? Tesla stayed green. Neo stayed green. XPEV in the end wasn't green, but I still took a good trade. The reason why I took XPEV was a sympathy play on Neo, just because Neo Day's coming up, tons of hype around it. Sometimes I'm the type of guy that likes to trade. I don't like to trade what everyone trades, right? I like to take those little hidden gems. But let's take a look at the trade. So if we look at my prices, and how I got filled. Oh my God, I don't want to fucking do that again. If we take a look at my prices, how I got filled. I bought XPEV for 310, sold at 392. If I pull out the options chain, I was trading these $47 calls and I actually sold them in the money. If I take a look at this, pull up the chart, go back on the 1 minute, now we're looking at both of them. I got in exactly on this candle right here, but let's take a look at why I got in. XPEV had massive selling pressure in the morning. Right, the first 1 minute candle. The first 30 minutes of the market are always kind of crazy, so that's why I try to tend to stay away from it. But after 30 minutes, you can kind of see more of the direction. I'm a directional trader, therefore I take options. So we see this long wick rejection, rejecting lower prices. Saw this bounce up, break down, passes the VWAP. This is a 9 EMA and a 21. That's what I use. So XPEV was making this run up to consolidation, and this candle is where I took it, not knowing that this is where it would go. Right? If we just take a look here, this is what I was looking at. Fat move up, rejection of this trend line, consolidation, touch of this trend line, and down. I was looking at this as a bullish pennant right over here. Right? You have your flag, consolidation. At this apex, I was looking to take the trade. As we see in this consolidation, volume was dying down. And this candle, this is what I love. This is what made me interested in taking this trade. We have this fat green candle, volume pushed way up, but it rejected the trend line. The next candle, rejection of higher prices, a red candle, back to the 9. The reason why I still like this was because the volume was not above the average. That's how I can tell that it was just a pullback and not a reversal. I wanted to get in, it respected the 21 EMA once, twice, 3 times in this uptrend. So that's why I was comfortable taking this trade right over here. It touched the 21, and this is exactly when I pulled the trigger. I got in right around 7:06. I got in right around here. Granted, right after it failed, right? Selling volume started to increase. I still held diamond hands. We take a little scroll over. It rejected the VWAP. If it broke past the VWAP, I would have been looking to get out, take a loss. I didn't. This is why I kept holding, because of this green bar and these next green bars coming up. So it rejected the VWAP. I was patient. I was down around $200, still held it. Tested the VWAP again, started pushing up, consolidating here. Then we see this bigger push, right? Come up, back to the 9 EMA. Now, if we were to see a little push down and it start rejecting, that's when I maybe would have started to get worried and get out. But as we can see, volume started going up, and this is when it took off. This is exactly why I kept holding. I wanted to hold for quite some time because of this huge green bar. Right, volume started increasing, pull back to the 9, break of the trend line, back to the 9, and it just kept going. More green, more green. Granted, now we get to up here, right? See these candles going up? This was my price target. I was trying to get in at, trying to get out at 47.5. Why? If I took a look at the hourly chart, I looked at previous resistance, and I saw this was my first price target because price failed around this time in the past. So that was my first price target. Since I'm day trading with a hefty position, I wanted to make sure that I minimize my downside and have specific target entry and exit. So if we go back to the 1 minute, I got out on this candle right here. Granted, it's not the best, right? I didn't perfect it to a dime. I didn't get in the low. I didn't get at the highs. We can't time tops and bottoms. I still think I did a pretty good job. I caught a almost 2.5% move in options. So let's take a look at what happened here. Double top, failure. The reason why I started getting out here is, you see, the first time when we were going up, it rejected this 9, right? Hit my price target, volume was picking up, the selling volume was picking up past the average. I got out here because I didn't want to take the chance of breaking past this 21. Granted, I could have, held the bounce and sold up here. Wait for the retest of the highs, and as you can see, this long wick rejection, you got this little janky head and shoulders pattern, and that's when it started failing. So if we look back, $310, got out at $392, 10 contracts. That's going to be $820. Let me know what you guys think. If you guys want me to take a look at any stocks in particular, provide some technical analysis, I'd be happy to do so. But that's how I made $820 in just 40 minutes in the stock market. Thanks for watching. My name is Sebastian, once again, your host.